You're listening to Crazy Shit in Real Estate. You'll be amazed at all these wild but true situations that others have found themselves in. Because on this show, you'll hear uncensored, unbelievable stories from the world of real estate. I'm Leigh Brown. Let's dive right in. Hello, friends. It's time for more Crazy Shit in Real Estate. Today, we've got Martin Saenz, and this is going to be a deep dive into a side of the real estate world that you probably didn't know existed, which has to do with buying paper, aka owning mortgages, aka tranches. So dial in, pay attention. You're going to learn something, and you might even find a new way to invest. And I'll see you on the other side. Before you get the rest of the story, I'd love to share a quick message from today's sponsor. Hey, y'all, just going to take a quick break from this conversation to let you know about the sponsor of today's episode. That sponsor is, well, frankly, it's me. It's Leigh Brown University. Look, it's no secret that real estate is crazy competitive, getting more so every day. And when the pie doesn't get any bigger, but the people wanting a piece of it do, you've got to figure out a competitive advantage. And that's why I created Leigh Brown University. It's everything you need from soup to nuts, cradle to grave, point A to point B, whatever point B is. Each of you has different goals. So maybe you're a new to the career realtor, or you're a super experienced pro who can't figure out that next level. There's something in my course that's going to help you break through. It's designed for you. Before I even met you. So enroll in Leigh Brown University today. You go to www.leightbrownu.com and I'll see you there. Now, back to this amazing content. Signs everywhere, signs.
Exactly.
Which you probably hate that song, but you know, it's like they say your name all the time. So who wouldn't love that?
Yeah, you got to take what you can get, right?
So your shirt says Bequest Funds. Are we going to talk about death today?
No. We can talk about legacy.
Oh, that's a nice way to put it. You know, one of my favorite things is, you know, in the white church, there's a funeral, but when you go to a funeral at a black church, it's a homegoing service. I love that so much because it's such a better phrase and it's so much more impactful. So much we can all learn from each other. So speaking of learning from each other, thank you for coming on the podcast.
Yeah, of course. I know we had a few rescheduling. I'm sure, you know, you're busy as can be, which is a good thing, right? I
mean, we learn not to complain about being busy. We just suffer through it sometimes. But I appreciate you being willing to work with me so we can talk about legacy a little bit. So tell me a little bit about Martin Saenz and what you do and give us a little background.
Okay, sure. As it relates to small business ownership, my wife and I have been in business since 2005, and I've been a landlord since 2009. And I've been a full-time mortgage note investor since 2013. And I still landlord, so I can speak to buy and hold, both on the residential and commercial side. And I've never flipped a property, and I'm very happy that I can be able to say that because I've seen that side of the fence plenty. And I like to play in the paper side. I like to do what the bank does and work on building long-term streams of income.
All right, so let's talk about that a little bit, because the viewers of my show and the listeners, they're very used to hearing about investors, but we've never had anybody on here to talk about mortgage notes outside of like an actual regular lender who does typical mortgages and refinances. Mm-hmm. So give us a quick explanation of what it is that you do. And remember, in my audience is not just real estate professionals, it's also regular people who kind of did get the inside scoop on lots of angles of real estate. So you've got some normal people out there too.
You're saying real estate people are weird.
Absolutely they are. These people work 24 hours a day, and then they simultaneously love it and hate it. And they get paid sometimes, and sometimes they don't get paid, and they get screamed at and cussed at and hugged all in the same afternoon. I mean, you kind of have to be crazy to live in real estate.
Yeah. And as long as getting paid is in there some way, right? You learn to tolerate it. Yeah, so I don't do anything on the origination side. I buy mortgages from the secondary mortgage market space. So there's literally a flea market beyond the origination point whereby hedge funds and other lenders buy and sell mortgages. And I do that to the tune of millions of dollars, both on the performing mortgage and non-performing side. So I'm a large consumer of purchasing non-performing mortgage loans and getting those mortgage loans to perform as a profession.
All right, so tell us what it means to be non-performing.
So essentially, the borrower is in default beyond 90 days. But
Look,
in most,
Martin is so nice, y'all. He's saying they ain't paying. Go ahead.
but generally, we're talking 4 or 5 years they haven't been paying.
Did you say years?
Yeah, years.
All right. So how does it carry on that long when I've had clients who have hit hard times and after 3 months they're getting demand letters? How does it last that long besides the person who heard about filing for bankruptcy as a solution?
So it's actually more common than you think. There is a large body of these mortgage loans that have sat on bank books for many years. Most of them were originated sometime in the 2000s, early 2000s, and they've been in default 4 or 5 years. And the bank at some point, after internal charging off and doing other tactics internally, they'll go and pull them into a tranche and sell them into the secondary mortgage market space. So that's where a company like mine purchases them. And, with smaller banks, they're usually, going to go and send the demand letter out, and they're going to pay a little bit more attention to defaulted paper. But banks like Wells Fargo, PNC, and the larger guys, they could take a little longer to get through the process.
All right, so it's like buying a box lot of Barbie dolls on eBay where you've got 50 dolls in the box and there might be 2 good ones that the hair's not a mess, and there's going to be some without heads and some without legs and some you can play with and some that should be thrown away. Is that basically what your tranche is? It's a lot of mess and you don't really know what you're buying?
Well, you very much have a sense of what you're buying before you're buying. The fact that the mortgage loans are considered scratch and dent, that's without saying. The bank is.
I love scratch and dent. That's the best way to get a refrigerator.
Because there's a value add, right? That's real estate, 101. So, when you're buying something at par and the coupon rate's at 6%, then you're not going to get wealthy off of that. It's when there's, you're buying something at 30 cents on the dollar and you can get it performing at par. That's when you can do well as a business.
All right. So you get it performing. That means you go knock on doors and get people to start paying their bills again?
Yeah, it's a little bit more to that. I mean, we work with a licensed servicer. We have a team of asset managers that work for me and my department. And so we're a very compassionate bunch of individuals. We consider the borrowers as customers and we treat them like gold. So we actually cultivate deep-rooted relationships with the homeowners so that we can not only create payment plans that they can afford, but we can be first in mind when it comes to making payments.
I love that. So what is the secret sauce to that? We know that coronavirus era, there's a lot of people who have received forbearance from their banks, but without getting into that rabbit hole of how that was just a kind of a hot mess, you're going to have people out there that could be brought back to current if somebody talked to them, because a lot of the folks that are in forbearance haven't had a conversation. So what are your secret tricks for getting somebody to understand the importance of paying that note?
Yeah, so upfront direct conversation, right? How about that for an idea? We are, when the phone rings, we pick it up. We are always very courteous and professional to the homeowner. We understand what their predicament is. Because we did buy this loan at a discount, we're able to extend some concessions in order to help keep the homeowner in their homes. But I will tell you, from a collectability standpoint, we maintained very well all throughout COVID. And what we found is that very few people actually needed real assistance. And we did provide it when it was needed.
Right.
But for the most part, we just needed to be a little bit creative to help people kind of get through some rough patches. And people really wanted to stay in their homes. The media is not going to tell you that, but people valued their homes more than they did prior to COVID.
Oh, and I think you're absolutely right. And what's crazy is the rules that came down during COVID were just blanket. And that doesn't solve problems, because I found the same thing as a housing provider myself. Because I've tried to quit saying landlord. It's got so many negative connotations. But just talking to my tenants, finding out, hey, y'all good? Do you need anything? Do you need toilet paper? Are your kids okay? Just that humanity. I found out most of mine were fine, and there was one that needed help. So we figured things out, and she's fine now. But it was all about the conversation. Are you saying that a mortgage note that's 5 years late is the same situation on average as the conversations I'm having with my tenants during the coronavirus era.
Yeah, 100%. When during the heart of COVID, with several of my commercial properties, I allowed the tenant to use the security deposit as a monthly payment. I mean, that's just landlording, right? Those are just the tricks of the trade with landlording, things that you do. And so when a homeowner calls us and we feel they're genuine, they're coming through, they're being, we feel they're being truthful about their predicament. We're going to do everything possible to create a payment solution that's going to work for them while keeping us profitable. That's a win-win.
Okay, so how do you make money on buying these notes? Is it in the long-term payoff when they sell the house one day? Is it in the monthly payments because you bought the note at a discount? Talk to us about how profitability works for somebody who's never been in that space before.
So I'll give it to you from the example of Bequest Funds, the income fund that we launched last year and we're running today. So in that fund, we buy performing mortgages. So what that means is that at some point during the origination phase, these loans were originated at a top 10 bank, Wells Fargo, PNC, Deutsche Bank, and so on. And at some point, a portion of that pool went into default status. And at some point, that lender created a tranche with that defaulted paper and sold it into the secondary mortgage market space. Some hedge fund went and purchased those mortgages in a defaulted state, made contact with the homeowner, worked out a loan modification, and the homeowner started making their payments again. And so now we have a seasoned performing mortgage. And so my fund, Bequest Funds, will buy that into the fund at a 12 to 14% yield while paying our investors out an 8% yield. So that's why, hence the name Bequest, because it's a legacy play, whereas we're able to make monthly payments to the investors because we're collecting monthly payments from the homeowners.
All right. So for somebody to participate in what you do, whether it's the buying of notes or looking at a fund like yours, how much experience do they need in real estate or the mortgage markets or any of these things? And the second half of that question is, how high of a risk profile do they need for this stuff?
Yeah. So, I'll kind of answer it both ways. If someone wants to come in and create a note business for themselves, I've written 5 books, 4 of which touch on the note industry. And so a lot of what I've written about is guidance to help individuals start a note business for themselves. So anyone can kind of follow those steps that I've outlined or take other training elsewhere, or what have you, self-educate and learn how to go out into the secondary mortgage market space. They'll learn how to vet and asset manage those notes to performance, right? So that's kind of one way. There's lots of risk in terms of compliance, in terms of just learning curve lane, right? I mean, anytime you're taking on a new venture. Now, if you want to bypass that and you just have money and you're looking for passive investment, Bequest Funds is made up, majority of our investors have no real estate experience. They're just doctors, lawyers, business owners that want to park money somewhere and receive an 8% annual return paid monthly.
Results are not guaranteed, by the way, friends. So anyway, with that being said, my show is all about crazy shit in real estate.
Yeah.
So you're in a piece of the industry that is pretty much under the radar because people don't think about mortgages once they get it, unless they watch The Big Short, which if you keep hearing the word tranche, you should go watch The Big Short. It's probably the best explanation of what went down during the recessionary period. You'll understand tranches a little bit better, although it's totally fictional and a little bit hyperbolic. It's a great explainer movie and it has famous people in it, so y'all can watch it. So anyway, let's go back to crazy stuff. So I'd love to know what has occurred to you that made you go, I cannot believe that this just happened. What's the story you would tell my audience?
Yeah. So, well, gosh, we purchased a note maybe about 18 months ago. It is a property's worth about $2.5 million in Seattle, Washington, maybe about a couple miles from the CHOP district, and also about 100 yards from like a very prestigious tennis club that Bill Gates is a member to, and all these other.
YouTube, do not delete us for saying Bill Gates. Just don't delete us. We're not involved in any of those shenanigans.
Yeah.
He didn't kill himself.
I just say COVID, Fossey, we're going to get assassinated. I know. But anyway, There's a first mortgage on the property. 1.8 million is the balance. Property's worth 2.5 million, and our mortgage loan's about 500,000.
That sounds good.
So, yeah, sounds good. So we purchased that loan for $100,000, and we start connecting with the homeowner. Homeowner no longer lives there in the property, and so there's a tenant in the property. And so the homeowner is trying to make contact with us saying, hey, we want to move back into the property. We're going through lots of communication with this individual. It turns out that it's just kind of a stall tactic. And so just through the course of a year, we end up taking ownership of the property, which we own the property today, and subject to a senior mortgage balance at 1.8. So we take possession of the property. The former owner of the property went and kind of got into the mix with the tenants. So the tenants leave, they vacate the property. So now we have a vacant property, which we go ahead and list for sale, which we're actually kind of happy about, because in Seattle, state of Washington has an eviction moratorium. The city of Seattle has a more stringent eviction moratorium on top of that, right? Like as if the state's not doing enough.
That virtue ain't going to signal itself, Martin.
And then, so we have to clean out all the stuff from the homeowner. We have to keep it in storage. There's all these rules you have to abide by in Seattle for a certain period of time. And so we're left now with a property, we're trying to sell. And it turns out, there's black mold, there's other issues with it. So now we're in negotiations with the senior mortgage to have consideration for them to lower the 1.8 if we have to drop our price, which we've just dropped our price to 2.3. So you'll have some lengthy going-ons with some of these mortgage loans. But at the end of the day, a majority of these homeowners, if you're buying these loans correctly, there's so much equity backing these loans that a lot of these homeowners are refining you out, or they're coming to the table much more quickly than they did in the past.
Well, that's the good news about the low interest rate environment. There's an incentive to refinance and let you get your piece, and they can move along and do something that's beneficial to them, and it's a win for everybody.
Yeah.
So in that mortgage note buying paper space, what's the one thing you wish you had known at the beginning that you know now?
I would say that I wish I would have raised capital and purchased more in the beginning, because it was for loans that were paying 40, 50 cents on the dollar for now. They were selling for 10, 15 cents when I first started out. And there was an abundance of inventory. And so I had left so many deals on the table because I had just thought in my mind this was always going to exist.
So fear and inertia got in your way a little bit. And it's kind of what anybody in real estate would say about surviving 07 to 13. Golly gee willikers, I wish we'd have had more liquid funds to buy more properties. And in fact, anybody trying to buy in 2021 wishes they bought in 2019. But here we are. The key is getting involved in the market, and then close your eyes and think long-term hold, which is what Martin started off by telling you, that it's about the long-term hold and the long-term relationships in place. Martin, if somebody wants information on what you do, they want to find one of your 5 books, they want to find out more about Bequest Funds, what's the best way to find you?
Yeah, they can go to Amazon and just look up my name, Martin Saenz, and my books will be up there. I wrote a book on selling to the federal government, which was my first company that my wife and I founded. And that sells the best. So apparently people want to know how to sell to the feds more than they want to know how to note invest. Go figure.
Well, the feds have a budget. They're obviously willing to print and spend money like it's growing on trees.
Yeah, exactly. But they could reach out to me at martin@bqfunds.com, and I'll send them out a free ebook.
What? Free stuff. Look, guys, aren't you so excited? But y'all didn't know that. So you weren't paying attention when he gave you his information, and you can't spell his name, and that's okay. Everything is in the show notes for this episode. So just go over there to follow Martin, pick up one of his books. You know which one to buy now, and reach out for more information, whether you're a passive investor or you want to get actively involved in this yourself. Martin, thank you for coming on the show and for talking to us about a really quiet little niche of the business with some opportunities in it.
Yeah, thanks, Leah. Thanks for having me on.
All right, guys, if you've learned something, give us some love in the comments, give a like, give a share. Most importantly, subscribe and give 5 stars, and we'll see you next time.
As always, I'm so super thrilled that you joined in for more crazy shit. And if you're a realtor, investor, inspector, lender, or just a regular human being who happens to have an unbelievable story that you need to tell the world about, or frankly, you just need to one-up the story you just heard, then make sure to DM me on Instagram at Leigh Thomas Brown, or tweet me at Leigh Brown, or frankly, any social network where you hang out. I'm there. And if you had some fun, then you totally want to subscribe so you don't miss out on any future episodes.